Ladies and gentlemen, as you know, it's Wednesday, and on Wednesdays, I like to interview somebody in the world of knowledge that is out there. And today I'm going to interview a gentleman named Bill Allen, who is the CEO and owner of Blackjack Real Estate. You can find that at blackjackre.com. So Bill Allen actually lives here in the Nashville, Tennessee area. And I've hung out with Bill a couple occasions, far too few if you ask myself and me. But he's a real estate professional. So Bill, can you just tell us a little bit about how you got involved in this industry, man? Like what you do, what your specialty is, all the good stuff.
Yeah, it's interesting that you can hear me, right? Yes, you can hear me?
Yeah.
Okay, everybody's saying yes. All right.
Why can I hear you?
Yeah,
there we go. What's up?
Okay. Awesome. Everybody can hear me. They said in the chat. That's cool. Okay. So for me, it's funny that you're showing like a ticker symbol and all these traders. I was a Navy pilot, so helicopter and airplane pilot for the Navy. I was doing that active duty, and I was in index funds. So not doing what you guys are doing, but that's kind of was my way to wealth was like 8% a year. If I just could average that and kind of grow my net worth, I'd be a millionaire by the time I was, I don't know, 60, 70 years old. That's what I thought.
Yeah.
Eventually got married, had our first son. Like we got pregnant with our first son, and I realized like I got to figure out how to like take active role in my growth for my net worth. And I was kind of looking around for something to do and found real estate. And I had bought a couple houses as I moved around with the military, and I was renting them out, and I was seeing that I was cash flowing some houses, and I was also, my equity was going up in those homes. So my net worth sheet was going up a lot faster than it was in that kind of slow speed of which the index fund was growing. So
right.
That was kind of my world. I started learning more, educating myself on real estate. And that's just kind of what brought me there. And I landed there and said, I can control this stuff. Like I can control the decisions that I make, the investments that I make. And if I win or lose, it's on me instead of somebody else. So that was kind of my epiphany shift for myself.
Love it, man. And I want people to realize that, guys, Bill Allen is huge in this world. So this guy is an extremely proficient, not only, I mean, everything that involves real estate, but a lot of wholesaling and flipping and investing directly into real estate. So if you guys do have questions, for those who are here live, feel free to throw in the questions. And for those who are watching this recording, wherever you're watching it from, feel free to post any questions, and I'll do my absolute best to answer it. So when people see these signs, Bill, as they're driving around, like we buy houses for cash, are those signs real?
Yeah. So like when you see those signs around, it's typically somebody like a company like mine. It's a wholesaler typically, and they're looking to basically put a house under contract. It could be a flipper who's actually going to buy it themselves, but a lot of times it's just somebody marketing directly to sellers. So is it real? Yes, it's real. There are people out there that are buying houses. We typically, it's a whole different world. If anybody's on this call who's like thinks real estate, they think real estate agent, put a sign in my yard, put my house up for sale, and it'll sell when it sells. But we operate in this like distressed world. So there's a world that a lot of people don't understand in the real estate space, which is people who can't sell their house with a realtor. It needs a ton of work. They don't want people coming in their house. There's all kinds of, they inherited a property. They just want to move it really fast. They have tenants in that they don't want to evict or can't evict right now. And they want somebody to just take their problem from them. So we're in the problem solving business, if you think of it that way. So those signs are real. And it could be somebody, a wholesaler who's actually going to take the property, put it under contract, and then sell that contract to somebody else for a fee. And so I always tell people when they ask what we do, we're kind of like a pawn shop of real estate. Like if you think about that concept, people come to us knowing that they're not going to get full price for their property. They know they're going to take a discount, but they want their money fast. They need some relief. They need the pressure taken off. And it's not about taking advantage of anybody. Like when you walk into a pawn shop, you know that you're not getting retail price for that piece of jewelry that you're walking in with. And it's the same thing here. They come to us. We're very open with what we do. So there's signs in the yard. Like if you're selling your house and you want top dollar, I wouldn't call the number on that sign in front of Lowe's, but if you've really got a problem and you want to move fast, then it's a good solution for a lot of people. We only operate in like 3 to 5% of the real estate transactions in the year. So the real estate agents own the majority of the space. but we help the people that they can't. We get a lot of referrals from agents and things like that. So
Oh,
hopefully
nice.
that's hopefully that's like a broad idea of what it is. I use the analogy a little bit like when you go to the grocery store, you don't like the grocery store is not going to the farmer to get the lettuce and the carrots and the apples and things like that. There's somebody who's going to the farm. They're getting this product at a discount, and then they're going to move that product to the supermarket, who then has a markup too. So we are like the middleman in the ecosystem between the seller and the flipper, landlord, or somebody like that, where we go out and find the properties.
Love it. So what do you do after you find the property? What's the next step for you?
So somebody calls, we get a lead in, and we go out and look at the house. Or right now, we're just doing everything over the phone. So we negotiate a price that works for them and it works for us. And then we're primarily a marketing company. So we go out and we market that contract for sale to an end buyer. So we mark it up, we make our profit in the middle of the wholesaling side, and we send an email out to our buyers list. It's people who are looking for properties to buy that don't want to spend a bunch of money upfront marketing for them. And they're willing to pay us a fee to go out and look for properties for them. So flippers, landlords, Airbnb buyers, developers, anybody who is in the investment space. And then we sell that contract to an investor who then, brings the money in and closes on the property. So we actually don't have any money in that transaction on a wholesale deal. We just kind of make the spread in the middle. So we bring the end buyer to the contract, they close the property, pay the seller, and we make a spread in the middle. And it could be anywhere from a couple $1,000s all the way to our biggest wholesale deal is probably 60 or 70,000, something like that. So, but we're shelling out a lot of money up front. So we sell that contract. The flipper then takes the property and renovates it, and then resells it to a retail buyer and makes a profit after that.
Right. Yeah. Which is, it makes tons of sense. For people who want to know, when you read a book or you see the advertisement on Instagram or whatever, or Facebook, and someone is saying, you don't need any money at all ever to buy a house, up front. What are your thoughts on those commercials?
Well, so I also run an education company. So I run a mastermind group education company that I own. So I teach the same stuff that we do now. Yep. And we sell stuff, right? So we sell these videos and products and events and high price mastermind groups to come in and be a part of. And I'll be the first one to tell you that I think a lot of people are selling a whole load of like dreams, and it's a bunch of crap. As far as, do you need money? I won't say that you need money. I think you need time or money, one or the other. Yeah. So if you fall into one of those buckets as you get started. If you don't have money, it's okay, but you can't really not have any money and not have any time to do anything either. So a lot of times folks can actually take their time to go out and network and knock on doors and maybe like buy a cheap list, and then they're calling people on the phone to see if they're interested in selling. You can put a lot of the sweat equity into it and not need a lot of money. And then there's people that have a lot of money and don't have a lot of time, and then they can dump some money into marketing. But it's a marketing and sales business, the wholesaling world. And so you definitely need one or the other, I think. And if somebody tells you they don't, they're probably selling you something that you don't want to
buy. Bingo. What's your website for that course, Bill?
So our information company is 7-Figure Flipping. So 7figureflipping.com, the number 7.
The number 7.
Yeah. So so that's like, I always feel like anytime I listen to a podcast or we people are promoting things, a lot of times you don't see the whole story. Like they're not telling you, there you go. There's my lead magnet popping up.
There it is.
So they won't tell you the whole picture. They're telling you like the best deal that happened. And a lot of times, like I see, Facebook marketing is really big, and I'd say like look under the hood a little bit of that, because a lot of times if they're selling something, they're showing you like the best thing. It's a challenging business. It's not easy for sure.
Yeah.
But I will say that hard work pays off, and a lot of people look like overnight successes where it's taken a few years to get to that place that they are. And
right. And I'm going to give my stamp of approval, guys, on Bill for sure with anything that he does or says, because I've worked with this guy in person. I've seen him. I know the charities that he works with. I know his real life approach, where he will share up front, like, here's the horror stories, here's what goes wrong, here's what doesn't work, because it is real estate. At some point in time, you can touch it, you can manage it, you can see it. The numbers make sense, just like in the stock market. If you can figure out the numbers, if the numbers make sense, you can make money with it. If you know your risk, you know the numbers, you can play the game, and it's just an educational approach. And Bill is a very, very good teacher because he does go with the direction of, here's all the mistakes that I made, here's how to avoid them, and here's what you need to do to go forward and actually make some money doing this stuff.
Well, that's it. It's like the vulnerability, I think, in being open to share your losses as much as your wins. Like every deal we do is not a home run. We lost $70,000 on a house in Pensacola a few years ago. We've lost $50,000. I mean, we lose money on properties and deals from time to time. We don't always make the best decisions. And I think the interesting thing, I'm a flight instructor down in Pensacola for students right now, and part-time. I still fly for the reserves. And so what I tell those students is, like, I expect you to make mistakes and make them all. I want you to make all the mistakes before you go for your check ride, to go on your first solo and fly by yourself. But I don't expect you to make the same mistake over and over again. So everything that we do, like win, lose, draw, whatever it is, it should be a lesson that's learned, so we don't go repeat that same thing over and over again. And I think that's in real estate or anything else that you do, in stock market, anything. You're not always going to win. And I'll be the first person to share. I think we learn a lot better from our failures and our mistakes than we do from our wins, because you can get kind of really cocky and overinflated a lot if you're just focused on how great you are. So I think that's the big aha that I had, was the more of the failures and issues that I have that I can share, the better, because then somebody else they can learn from mine. They don't have to go make it themselves.
Yeah, bingo. Josh wants to know what type of Helo you flew for the Navy.
Oh, I flew primarily the MH-60 Sierra. So it was the Navy version of the Black Hawk. It was a Nighthawk. And then I've also got some time in the Romeo. I was a test pilot. I went to test pilot school in England, and then I was a test pilot in Pax River, Maryland. So I've probably flown 40 or 50 different type model series, all kinds of different helicopters and planes. Pretty cool.
Heck yeah. Love it, love it, love it. So if shifting gears for just a moment, you did mention early on about the index funds and the 8% a year. Do you still do that, or is all of your investing in real estate, or what does that look like?
Yeah, I actually moved. It was over time. Like, I was actually, my IRA and 401k was still in the stock market for a long time. And so I have now moved almost all of my money over to real estate. My kids have an IRA, so they work for the company. They get a little Roth IRA every year that they fill up. And I still have some of I do like a backdoor Roth IRA where some of it's still in the market, but it's not a lot. I'm not really heavily there. I'm waiting for Jeremy to tell me when to jump in and buy stuff and sell stuff. So
love it, man. Super, super cool, dude. Well, when it comes to real estate, when you talk about having all of your money in it, does that, what does that look like? Is that rentals? Is that commercial? Is that a bunch of residential properties? What does it look like for you, or what would you suggest for other people?
Yeah. So diversification, I think everybody will agree, is a smart thing. So I diversify inside of real estate just like I would anywhere else. So I have the way I look at it is, I have these active companies. So the 7-figure flipping company and Blackjack Real Estate, which you saw, those two are my active income streams. So these things make me active income, W-2, dividends, stuff like that. It just comes in, right? And so then I look at everything that I do with my investment portfolios. Like, I like to bury my money in the backyard. So because I don't have a lot of time. You guys are buying and selling stocks on a regular basis all day, right? That's your active income. Look at that. Like, this is your job, right? And so for me, I want this passive stuff. I want things that make money when I sleep. So what I do with my money is I lend my money out. So I do some hard money lending to other investors. So you have another house flipper that is buying a house for $150,000, putting $30,000 into it and selling it for like $250 or $260. I'll do the loan on that deal, $150,000, for somewhere around like 2 points. So 2 percentage points up front and 12% interest, something like that. And they'll make monthly payments, and that will just bring in kind of passive income for me along the way. So some of my IRA and 401k money goes to do that, my personal money. And then other deals that I do are in the multifamily world typically. So like apartment buildings, we're building storage units down in Davenport, Florida, down outside of Orlando right now, like 2,000 units storage. And so I put some of my money and raise money in there to just kind of fund different syndications, like all around the Southeast. I have some apartment buildings in Alabama, down in Florida, in Georgia, and in Kentucky. And now we're buying one just right down the street, actually, in Murfreesboro, hopefully in the next month. We got a contract yesterday. So that kind of
Bill
stuff
Ware.
is where I put my money and help raise other capital. And yeah, I don't have a lot of single family rentals. I did in the beginning when I moved around for the military. I just kind of bounced around and bought a house, and I got to 10 houses, and it was making me like $100,000 a year on kind of cash flow. But it was just too much work, and I had a ton of equity in them. So I sold them and moved my money into something else.
Yeah. Yeah. No, man, I mean, I get it. It makes sense. It makes a lot of sense. And when you're kind of piecing everything together, a lot of the questions that people are going to have initially in real estate is some of the big, broad questions. Like when you mentioned earlier, you look for distressed properties. Is there one type of distress that you focus on the most?
Yeah, so there's two types of distress that everybody can fall into. It's a distressed person or a distressed house.
Mm,
So a lot of people think the house has to be really beat up, but it doesn't. Like I've got tons of stories that we bought a house down in Pensacola that was worth $170,000. It was 2 years old. It was almost brand spanking new. Like the family that lived in there was older, the husband and wife, and they had some issues with some things that were going on in the neighborhood. They were frustrated with we didn't know it at the time, but they hated their next door neighbor. And there was an apartment building that was going up behind them that they just couldn't stand the sight of it. And so they just wanted to get out they just wanted to leave the house. They didn't want to, I didn't know why they were selling. I didn't really care, but it was a $170,000 house where they were selling to us for $100,000. And so we bought it. We didn't even have to clean it. The woman cleaned it like spotless. We shampooed the carpets and put it on the market and sold it for $170,000 like a day later. And
nice.
so, we made like $40,000 after fees and commissions and money costs and all that stuff. There's a lot of costs that they don't show you on HGTV. And then we come to find out when we put the sign in the yard next door, the people next door called like yelling about the fence is on their property and it needs to be ripped down and all this stuff. And so it was pretty clear they just didn't want to put a sign in the yard. It felt like, there was like the feud between the two houses. So I think that was a big motivating factor for that family. And they bought their other house with cash. They didn't even need our cash to buy their next house. So they had plenty of money. And then you have the distressed property, and that's like an interesting kind of distress example. We have people who lost their jobs, who have medical bills, inherited a house, don't know what to do with it, tired landlord that's tired of people not paying their rent and having to evict people, and they're beating up the property, all this stuff. And then you have the busted out house. You have the distressed home where maybe it's a hoarder situation where there's just boxes to the ceiling and they don't even no realtor is going to list this property and put it on the market and things. Or you've got a house that's like falling down, like needs a ton of repairs. Any realtor that comes is going to be like, you need to fix this, this, and this. Or it's so cheap that a realtor doesn't want to list it. It's like $13,000, $20,000, $50,000.
It's like, what's the point? They're not going to get any commissions for it.
Their commission's like $700 or $1,000, So if that. So we spend a lot of time in that kind of distress world. So people or homes, it could be one or the other, but there's not anything specific that we look for right now. And during the coronavirus time, when the owner occupied houses don't really want to sell, like they just don't want to move right now. We focus on most of the absentee people, the tenants that aren't paying rent. That's where a lot of the distress is coming from now.
Love it. Thank you for answering those questions. I have a few other questions coming in the chat pane. Uncle Reed says, can he work with me on my house I already own in Nashville? Sure. Maybe.
Well, yeah. Hey, if you need some help selling it and you want to take a discount and sell on 50 cents on the dollar, I'm happy to come take a look at it. I always recommend, like, you're on this call, you know what you're doing, right? So like if you need some help, like fixing it up or something, there's a ton of contractors and retail folks that can help you. We really live in people are trading equity for ease of transaction for us. Like they know that they're giving up equity in their house and they just want to move. They just don't want to deal with it. They don't want, we handle all the transaction, all that stuff. So more than happy to work with you, Uncle Reed, if you want to take a haircut. Yeah. But I always recommend, like, anybody that I'm talking to, even the people that we work with, I say, have you ever thought of, putting this house on the market and working with a realtor, or why don't you turn it into a rental? Like we really kind of push them in that direction. If they say no, then we say, okay, we're probably a good fit then. Yeah, exactly. And I will say, guys, that's why I like a lot about Bill's approach is I've seen him turn away numerous deals where it's like, no, dude, like this is not for you. Like the transaction that he's specifically focusing on, like you mentioned, I have cash, you have a problem. Let's facilitate it as quickly as possible because you just want to get out of this and move on. Like you want to do it in hours and not months. Well, that's everything. If you look at
Yeah.
any business, it's what do you value more? Do you value this money more or the thing that you're trading for it? Like anytime I make a transaction, whether it's I'm paying or I'm receiving something in return, like or I'm getting paid, really what I look for is like that person needs to value the thing that they have more than the thing that I have. So the $100 bill that I have in my hand, when I hand it to you, I need to value that thing that I'm trading above that $100, and you value my $100 bill above what that thing is that you're trading, whether it's information, it's a product, physical product, food, whatever it is. Like it really is a people business in anything that we do. And you really have to make sure that you take care of the people. And if you do that, you'll be successful. Like this is just laws of success.
That's right. That's right. Absolutely. Patrick has a question. He says, do you have a pool of investors and do you bring in outside investors?
Yeah, we do. So we have like we just raised money for an apartment syndication. It was a really great deal over outside of Chattanooga. It's closing in a couple of weeks, and I did a quick webinar with some of my like a call about it for an hour with my family, friends, people that we raise money with, and we over raised by like $300,000 in that hour. So it's really good deals that we see. I don't know what you guys are looking at returns, but our like IRR on most of these, we try to hit around 18% is what I want to see. And there's some great tax benefits to it. So we do work with other investors and we bring in, like we have a pool of investors that work with us in our single family business and our multifamily business. And then we bring in a lot of outside investors. We made an offer on a property the other day for 34 million. So we were going to have to raise like 7 or 8 million in a month. So that would have been a bigger lift. Usually we raise like $1 million or so for these deals. We probably have this one in Murfreesboro that's like 93 units is probably going to be 2 or 3 million to raise. So,
Yep.
but yeah, we do kind of, I like to get to know the people that invest with me a little bit, like understand who they are. Patrick, I don't know if you were the one that was a military guy or if that was somebody else, but I have a website and I don't know if you want me to share that or not, Jeremy,
Sure,
but
man.
you can go. Okay. If you go to, it's called privatemoneyace.com, ACE, that was my call sign in the military. So Private Money Ace, that's where I send any investors that want to like jump on our list. And you can just like throw your email address in there and jump on our email list. So it's like a quick video of me that I threw together in the kitchen one day of what we do. And then a couple of like the single family deals that we have. So it's just like you jump on there. I'm not going to send you a whole bunch of junk, but we kind of talk, we get to know each other and then see kind of, I like to, we raise a lot of money. I like to see what people's goals are. Like, what do they want to do with their money?
Man. You got to make sure it's aligned. There has to be that alignment because if there's not, your investor is going to get mad or upset or frustrated or annoyed or like, why is it taking a year?
Yeah, most of the multifamily deals that we do, you're expecting your money to be locked up for anywhere from 5 to 10 years. So it's a longer term investment with depreciation benefits and things like that. So it's not like in and out real quick. So that's why I like to talk to people. And if we've never met, like we're not going to do a deal inside of a couple of meetings really fast, unless you're an accredited investor or something like that, then it's just really, I want to get to know the people. And I also want you to get to know me before we do a deal together.
Yeah, man.
I don't really need money. That's the thing. Like we have people throwing it at all these deals and money's doesn't seem to be the issue right now. It's the deal flow.
Yeah, man, which I love. And that's an absolutely huge aspect. Edward has a question. He says, what's the average price of a single family home in Nashville and how much rental income can we expect from them?
Nashville is probably not your best rental market. I would advise, I mean, if you live here, that's fine. Like I live here and I wouldn't buy a rental here. You can get much better deals in submarkets, smaller areas that cash flow a lot better. If probably a little bit better appreciation here, but you're probably looking at, so we use a percentage rule typically on houses, like there's a 1% or a 2% rule. So the example is like 1% of the purchase price per month, it should be the rent or 2%. So if you buy a $100,000 house or a $50,000 house, for example, you're looking to get in a crappy area like Pensacola, maybe it's a bit of a war zone. You want to get like $1,000 in rent for that house. So the 2%. Here in Nashville, you're going to be like way less than the 1% rule. So you might be buying a house for $300,000 that rents for $1,850. It's like the 0.6%. And so the returns aren't great, but usually when people that invest in longer term real estate holdings like rentals, they're looking for one of two things: cash flow or appreciation usually. So if you're buying in a place like Nashville, usually you're hoping you won't have a ton of cash flow.
You're doing the appreciation play.
hoping that you get appreciation. Yeah. And then like California investors and things like that, they're looking like San Diego. If you bought houses in San Diego in the 80s, you're loaded, right? But you weren't getting cash flow over time. You actually might cash flow now because the property's worth way more, rents have skyrocketed and things like that. But you've seen a ton of appreciation. And then if you go to a place like Indianapolis or maybe Birmingham, maybe some of these like cheaper houses, 50, 60,000, you're not going to see a ton of appreciation, but you are going to rent them for like 1250 and see a bunch of cash flow. And so that's kind of the name of the game.
That's it. Yep, that's it. Because the funny thing is, there are people in the United States, Bill, that have a hard time believing you can buy a house for under 100,000. AKA people who live in like California or New York, certain places up north. It's like if you go into some of the heartland, like you can buy an actual full-on house for like 120. And
well, let me tell you a story real quick. I bought down in Pensacola, Florida. It's in Pace, Florida, really great school district. A lot of people want to live there. There are some pockets that the houses are a little bit cheaper. And I was able to get a house, a 3-bedroom, 1-bath. It's about 1,000 square feet for $13,000. And it needed some work, but I bought it inside my Roth IRA. And then I owner financed it to someone for $60,000. So they bought it for $60,000. They put $6,000 down and they pay $650 a month. So in the first year, I basically got my money back. And over the 15-year note that I wrote with them, I'll make $150,000 if they pay it off forever. So that's $156,000 or so in the Roth IRA on the $13,000 investment over 15 years. I mean, that's a great return, untaxable, completely tax-free growth. So there are deals like that you can find. I probably would have had to pay like $40,000 for that house on the market if I hadn't found it off market. And you can do some creative things like that. So you can buy a house. I mean, we've had houses given to us, just take it. And it was like a trailer on an acre with a tree growing through the middle of it. But we made, $10,000, $12,000 off that thing. And you can buy, I don't know, we bought houses all the way down to, free all the way up to $600,000-$700,000. It's pretty crazy business.
That is so cool. So the 7-figure question, literally, how do you decide or determine or find those cities, those areas, those pockets in which to do this type of investing or real estate transactions?
Well, I think step one is you can't just throw a dart at the wall and say like, I'm going to go over to that city. If you're just getting started, I think I like to have some tie to that area. So you don't have to live there, but you might know the area or the market a little bit, or have somebody there that knows it. Maybe you grew up there. Maybe you went to college there. Maybe you have a friend there. Maybe you have a really great contact there or something like that. But I analyze markets all the time. There's also, it just depends on how much you want to work. If you want to be active in it, then you can go find those properties or go find those cities if you want to be active and go like analyze data and look at the numbers. I look at data a lot. I use a website called ListSource, and I look at, when I just identify a couple cities that I think could be good. It's listsource.com, and I go in there and I look at a bunch of data. You can do it for free. You can just sign up for a free account, and you can look at a bunch of data on this site. I actually just did an hour recording last week where I had somebody throw out a bunch of cities. I picked one, and I went in here and I analyzed the entire market for free, and I showed everybody how to do that. Like that, I think that's. So I do that if we're going to expand into another city, I'll go pick like 5 cities, either a prime market. So a prime market is going to be something that is, over 1 million people in my mind, maybe even, over 750,000 people, something like that, like a Nashville or Chicago or even like Atlanta, Jacksonville, some of these bigger cities. And then I also look at submarkets. So typically under 500,000 people, like Pensacola, Florida, where we have 350,000 people there, but we make $1 million a year in that city. So like really trying to look and see, do I want to be in a prime market? Because the prime markets are going to cost a lot more money, and the upfront in marketing, and cost more to find a deal, but you'll make more money on the back end. And then the sub-market is going to be easier to find deals, not as much competition from sophisticated investors, but it's going to be harder to sell that thing on the backside of it usually. So I feel like I kind of talked around this question a little bit, but I think if you look at the city where you live, and it's like San Diego or Nashville, and you're like, man, it costs Bill $6,000 to find a property in here. So you're going to be spending a lot of upfront money in marketing or a lot of time looking for a deal. Or you can go somewhere that's a little less competitive and not invest as much money and find better, better deals, especially if you're looking for rentals. And, I used ListSource when I did that video, and I used Google. So you can find that video on our 7-Figure Flipping YouTube channel if you want to check it out. It's totally free. I actually posted it on there so other people could watch it. So
7-Figure Flipping YouTube channel.
Yeah.
Okay.
I love it when people go to YouTube. I can see what they've been watching.
Let's do it.
So that video right there, how to find a good market. I posted it just a couple days ago, 4 days ago. So this thing, I share my screen. I go through it for like 45 minutes. I show you exactly what to do. Hey, look at that. We just got another subscriber.
Bam, dude. You're about to get a few subscribers.
So this video, I just every Friday I get on my free Facebook group and I go through, and I'm like, this one I was like, I'm gonna take a test today. I'm gonna have you guys just throw out a city, tell me what city you want me to analyze, and I'll run it through on supply and demand. And we picked where did we pick? Somewhere in Virginia, Richmond, Virginia, I think.
Yeah.
And I didn't know it that well. I didn't know the city that well, and I just got on the computer, the Google machine, and started analyzing it. And like 40 minutes later, I was like, I would need more. I would need to spend more time. I think you can make money here, but this looks like a viable market, but probably not something that I would like. It really blew my skirt up. So
yeah,
I'd say I'd probably keep searching or expand a little bit outside the city center to start seeing what kind of data I saw. So
yeah, love it, man. So number one, thank you for giving us this information. Really, really appreciate it. Because what the big takeaway, folks, is at some point, like Bill said earlier, it's either time or money. Those are the only two things you can spend. So with what Bill and myself and a lot of other people who made it in our profession or who did a lot of what people would refer to as success, we spent years just going through it and studying and making mistakes and figuring out and making a phone call or asking and saying and leaving money on the table and not doing it right and doing it wrong and just trying to create value for the world. And through that, you're going to learn a lot. And that's pretty much the aspect of the amount of YouTube channels, the amount of videos, the amount of information that you can search for and look for. And this video right here is probably worth truly hundreds of thousands of dollars minimum, because if you can go through it and figure out how to search and how to articulately determine, should you head towards this particular city? Like Bill was saying, Nashville, probably not the best rental market, specifically if that's all you're looking for is cash flow. And as we know, cash flow is king. But it's good to know those things, and you can do that by studying. So again, man, thank you for sharing that information with us.
Yeah, absolutely. You're right, though. Like any of those, the right information applied correctly is worth millions of dollars. Like a lot of people just take it and they don't watch it. They don't listen to it. They don't actually do anything with it. So I wish I had something like that when I was getting going. I had to figure it out the hard way.
Yeah, man. That's very, very useful to get. If anyone else has any questions, let me know. One person had a question about the IRA thing that you mentioned. And did you use a custodial for that, or did you do it yourself?
Yeah, so I actually see the question here. I wanted to make sure I cover it because you can't use your IRA to buy a house for you, by the way. You can't live in your house inside your IRA can own homes, but you can't actually physically do any work to the house. You can't provide value to that IRA. Think about the IRA separate from you, because you can make $6,000 a contribution right now per year, right? If you went and painted that house, that rental house that you have yourself, and didn't pay somebody to do it, you're basically making a contribution to your IRA. So think about it that way, to separate the IRA from yourself. And so yes, there's an IRA custodian. So you can use IRAs, HSAs, CISAs, the educational savings accounts. You can self-direct all of this stuff into real estate potentially. Same thing with 401ks. There's solo 401ks, SEPs, safe harbor 401ks, all kinds of stuff that you can do inside of real estate. And but you can't like go get an Airbnb vacation rental down at the beach and go stay there for 2 weeks out of the year that's owned inside of your IRA. There's specific limits. You also can't loan money and do deals with certain people. It's typically parents, kids, and spouse. Anything outside of that, you can pretty much, there's some gray areas with like business partners and things like that. So there's definitely a lot of rules to watch out for. So that custodian will help you follow those rules and make sure you're not breaking them. So there's two ways to do it. One is to have the custodian underwrite everything. So a lot of our investors that work with us, somebody asked about like, where do you find your money and stuff? A lot of people use their IRAs and 401ks because it's an untapped resource of capital that they don't really need right now. So they put it in some of these bigger apartment buildings with us, 5-10 years, they don't care. It's filling up their IRA. They're going to double their money in 5 or 7 years when we sell the apartment building. So the custodian can handle that. And then the other option is you can get something called a checkbook IRA, which is where you create an IRA LLC. So I personally do that. I have an LLC that I own that's owned by the IRA. So the IRA funds the LLC, it owns it. And then what I can do is I can just write a check or I can wire money that same day from my IRA. When you work with a custodian, usually it's anywhere from 3 to 7 day turnaround for the custodian to get your money to somewhere. So you can't go to an auction and buy a property where the custodian has to underwrite it and they have to wire it. But I can show up with a cashier's check from my IRA LLC and buy something. So it's a little bit faster, but I take on all the risk and have to know the rules to follow. So just be careful with that. You can blow up your IRA by doing a prohibited transaction or working with a disqualified person, and it could blow up your IRA, make it taxable, have to actually pay a penalty, tax all the money, and then they blow it up. It's pretty bad stuff. It rarely happens, but it does. So just be careful.
Got it.
Yeah, there's you can look up some IRA custodians, ask for recommendations. I have one that I send everybody to, but and they're great. So there's plenty of them out there. It's a whole other world that I didn't know existed until, I don't know, 4 or 5 years ago.
Man, amazing. And yeah, again, folks, do some research on it because like Bill just said, 4 to 5 years ago, that's not that long ago in the grand scheme of things. So figure out some information, get some knowledge behind you, figure out how you can start approaching different forms of investing, because the more you know, the more powerful you become, and the more you can share and create your legacy for your kids, your grandkids, your families, everything going forward. You just really have a lot more information and intel at that point. So love it, man. And again, if anyone else has any last minute questions for Bill, throw them in the chat pane. Otherwise, man, thank you so much for being here, dude. Really appreciate it.
Yeah, this is fun. What are you guys doing? You're buying and selling some stocks right now or what?
Yep. So this is the day trading room. So pretty much from 9 a.m. Eastern until 2 p.m. Eastern live every day. We just look through the markets and we do some trading. And so this morning I actually went to cash on everything. So it was a big day because it was just, everything was way, 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 way too high. Like Tesla, man. Tesla has gone, look at it. Look at this thing, dude. Like, you don't need to know a lot about the market, but look at this. It's not natural.
No,
you're not supposed to have that in anything. And anytime you have that, it's like there will be some selling. And that's
like the business hockey stick. That looks beautiful. I love it.
Yeah. It does. It does look beautiful. But it's just one of those times where, again, when you're in stocks, or if your home value looks like this, it's like, maybe I should figure out a way to protect myself in some form.
Yeah, well, that's where we're at right now. Like, that's where we are right now. We're propped up on unknown financials. So even us, like there's no inventory in the real estate market right now. So the prices are just going up and up and up, where it doesn't make a whole lot of sense that the prices are going up. So same as the stock market right now. It's interesting.
Yeah, man, I totally agree. And like with the whole COVID situation, I really, really thought that we would get some actual real estate deals, but it hasn't happened yet. And all of my mentors have been like, hey, dude, just wait a few more months, because all this is going to come to fruition at some point.
Yeah, it will, and I agree with you. I think so. If you're looking at real estate, looking to buy real estate, my recommendation is that you watch the foreclosure rates and the distressed sales, like the distressed retail sales. And when those start going up, what you're going to see is longer like times on market, more inventory. When we see more inventory, it's supply. It's just pure supply and demand. Right now, there's no supply, so the demand is going way up. Like, people still need to move. They still are buying houses. And so when nobody's listing their houses because they don't want people coming in and they're, concerned and all this stuff, we went through a whole summer market. The summer market in real estate is so important to like retail real estate, that we went through it, it was basically gone, right? It disappeared. People didn't put their houses on the market in summer like they normally do. And now kids go back into school, people don't want to move anymore either. So when you look at the fundamentals, like big picture like that, you start seeing, okay, now I can see why prices are still high and going up, frankly. And what you want to watch is you want to watch the distressed sales, the foreclosures, the short sales, people getting behind on their mortgage. Like depending on what happens in Congress, if this forbearance on paying your mortgage and stuff like that continues or not, we're going to see a really spike. Like there's over 8% of the homeowners out there that are in forbearance on their mortgage, like they're not paying their mortgage. So if you think back to the crash, it was like 12% or so. So we're not far off from that. Totally different reason why it's happening, but like the numbers are, we're going to start seeing a lot of that come. And even all the ghost inventory of foreclosures that the banks are holding, it's not gone yet. So it's I'd say I don't want to like, time anything, but I'd say in the next, inside the next year, we're going to definitely see some movement. So I'm planning for this event that I have in October because I want to talk about the next 6 to 12 months. Like, how do we prepare ourselves in the real estate market for that opportunity? And some of it is definitely like keeping some cash on hand for sure. So I totally agree with you. It's going to be interesting to watch, and you guys are going to see an opportunity in the market, I'm sure too.
Yeah, both. Yeah. Stock market and real estate market. I mean, because there's so many people just either not paying their mortgage or not paying their rent. I mean, and it's not, we're talking about commercial properties too. We're not talking about just residential. I mean, there's so many commercial liens and leases out there and shopping centers and other places where the restaurants are gone. The tenants are gone. Businesses are failing. They're closed. I mean, it's something that there is something around the corner. And it doesn't have to be massive or insane or huge, but there's absolutely some type of rest or pause coming.
Yeah, I mean, we've been in a seller's market for so long in the real estate world that there's a lot coming up. So, but as an active investor, I'm definitely not somebody who is a big proponent of like sitting on your hands and doing nothing either. So, like we're still doing deals on a regular basis. A lot of people that I know like close their doors, let go of their staff, shut down their business in March, and we kept marketing through it. We kept pushing. It was a challenge. Definitely margins are tightening up on us. It's a little bit harder to find opportunities and deals, but we're still out there, working hard. So I think that you can make money in real estate, just like you guys are doing in the stock market right now. It doesn't matter if it's up or down. You can make money in any market. You just have to know what to do and do the right thing. You might have to shift your approach and your tactics a little bit. And that's the key.
Yeah. In like 3 minutes or less, can you explain to me how does someone make money in real estate if it is kind of dropping and kind of looking a little scary?
Yeah. So if you look like real quick, you look back to 2008 when the market was crashing, right? They're talking about it now like it happened overnight. It didn't. Like in some of the most distressed areas, it was dropping about 1.5% per month. Okay. 1.5% per month. I'm talking to a bunch of stock investors that just saw like a drop of like 33% in a couple days or a week span or 2 weeks. Like, it's crazy to think that it was at 1.5% per month and people are talking about all this. What happened was they didn't recognize and realize that it was happening. So if you look back to that and take 1.5% per month for 12 months, in worst case scenario, you're dropping 15, 18%. And so if you can buy at 25 or 30% less, you see it coming, or you're a flipper, you can get in and out in 7 days, 10 days, 15 days, then you've got to move faster and higher velocity and think about your exit strategy. Instead of just like, people would just wait too long to drop their price. They kept believing that it was never going to fall. So you have to be realistic instead of optimistic about what's happening. So that's the key, is kind of watch, like just, if you assume that you're going to have 1.5% drop today. And so what we did during the coronavirus, we changed our buying model and we bought 10% less. We made our offers lower. And what happened? The market kept going up. So instead of, we made that 10% and then some off the difference. If it was going down, then we have to be able to get in and out faster. I mean, you can't don't go buy a new development and start building houses in 6 months that take 1.5 years, 2 years to do, and run all your numbers based on the fact that you're going to sell at today's value. So that's the problem that people get into. So just be realistic with your numbers and you can make money. And then think of your exit strategy. If you're a flipper and you're going to take 6 months to do the project, like, can you keep it as a buy and hold and cash flow it for the next 2 years, 3 years, 4 years if you needed to? like look at your exit strategies, have a couple backup plans if the worst does happen. So, I mean, when you look at it, like in most places, 1%, in some places it went up. Like during the crash, it was actually stayed the same or went up in certain areas because people were going there. Like people are still buying houses. Even in the crash, people were buying houses and selling houses.
Man. Yeah. I mean, it makes a lot of sense. And like I said, it's longer than a lot of people thought. It feels like it happened in an hour, but it took a while. And at the bottom, obviously you could, I mean, whatever you wanted was a deal, more or less. But that's very kind of similar to COVID in the stock market, but real estate in 2009, 2010. And even then though, I mean, it was still relatively hard to get financing in some situations. So is cash a really good play, and having a good group of investors and network and all that stuff? Just build it up, stack that cash.
Yeah, cash is king anytime, but even more when it's a buyer's market. Like the banks are if banks have a bunch of foreclosure properties and things like that, that you might not see as many loans, they're going to pull back, like interest rates start coming up. It's all kinds of stuff happened. During the coronavirus, all of our lenders just shut down for like 2 weeks. Like our hard money lenders, the banks are like, no more lending. And that's what freaked out a lot of flippers. And so then that freaked out a bunch of wholesalers. And then like everybody was like, whoa, what's happening? This doesn't feel good. This is uncomfortable. But we didn't care. We had $1 million in the bank. And we're like, we'll buy. But we're not paying full price. We're gonna take 15% off now. We're the only ones out there. So there's opportunity there for sure. And there's a lot of cash on the sidelines right now. So
love it. We'll still ask one more question. So Thomas says, what other passive sources does he look at for profits?
I don't know if I understand that question. Passive sources. Oh, like what other I'm pretty much like all real estate, like taking profits. Jeremy, do you understand that question?
I'm trying to think. Where do you allocate them after?
So like after I make money, where do I put it? So when I bury my stuff in the backyard, so I use that saying, like I bury my money in the backyard. I look for other syndicators that are bringing deals, and I'll put like $50,000 in a deal. Like I just invested in a syndication in Lexington, Kentucky this week. It closes tomorrow. And I just put $50,000 in that deal. I've got another $50,000 going to another deal that we're doing in Pennsylvania that somebody brought of a multifamily syndication. So I invest in other people's deals. I basically just like, I want to put it somewhere and then forget about it. And 3 or 5 years later, it comes back to me. I'll give you guys the best part about that. So I pretty much bury it. You're asking me where I bury it. I bury it in other syndications, multifamily deals, like large developments, because I'm in a place right now where I make a lot of active income. So my tax return shows a lot of active income on the top line. So what I want right now is I don't want cash flow as much as I want depreciation. So I was able to not pay taxes last year in 2019 and roll $150,000 in depreciation losses off my K1 into 2020. And I will say I made pretty good money of active income last year. And so to be able to write off all the active money that I made on depreciation for multifamily buildings was huge for me. I don't like paying taxes. I wrote a $150,000 check to the tax man a couple of years ago, and I said, I'm never doing that again.
Yeah. So this is all depreciation.
I'm deferring these taxes to the future though. I mean, I'm going to have to pay for some of this stuff eventually, but I try to get really creative with my tax return because I do make a lot of active income. And this is the time where I'm in my prime to make active income. So I want to defer that. I want to push it back. I want to figure out how to get creative with it. And that's why I invest in a lot of syndications that do bonus depreciation in year one. So if I talk to a syndicator and they're not bonus depreciating the property, I'll probably say no. I had a guy come to me, they had great returns, like 25% return projected. And I said, are you going to depreciate the whole building this year? He's like, we're not sure. We haven't thought about that. I don't know. And I was like, I'm probably not interested. And I just found another one that, gives me $10,000, $20,000, $30,000 write-off for my $50,000 investment. So that's what I want.
Killer. Love it, man. Well, Bill, thank you so much for your time. And again, folks, if you want to connect with him, go to his social medias, right? Reach out. We've got his YouTube channel now. So there's Seven Figure Flipping. You can go to listsource.com. That's not his website, but that's a place where you can do a lot of research. privatemoneyace.com if you want to get more information on just being an investor or adding some cash allocation to some syndications. 7figureflipping.com and blackjackre.com. You're everywhere, man, and I love it. And thank you so much for being here, brother.
Thanks for having me. This was fun. I wish you guys a lot of luck in the market today and every other day.
Yeah.
Good luck.
Thanks so much, man. I appreciate it.
Yeah.
All right, boys and girls. Well, again,
woo!
So much info. I'm gonna listen to that interview like 4 more times with a pen and pencil and get some real estate stuff happening. It is real estate month here at Real Life Trading. Bill will not be the last person that we interview about specifically real estate and just talking about where, when, why, how, all the kind of good details, and really just getting some knowledge and enrich some lives. Really quick update for those who are here on our trades. So CrowdStrike, we're in bearish on this one, meaning we want to make money as it goes down. So what I'm going to do is actually lower the stop on this particular trade to here. And it does seem like it is taking on the soft side of forever. So most likely, probably going to end up taking a small win on that and Zoom. So Zoom did have a little bit of a dip. We're going to move the stop on Zoom as well. And we'll probably just exit both trades for a small win at some point. Chewy, we can cancel just because it did not trigger. And if you shorted Tesla, congratulations. So that's pretty much it as far as the day trading room. So let me hop over here really quick. Cancel, CHWY, day trade. Rimbolt says, sit still for a second. Tesla trying to get to 429, 420.69. That's right. Got some orders. So if you got some orders filled at 420.69, congratulations. Obviously a spot to buy some Tesla. If you know anything about Tesla, that is the spot. And it hit it. It hit it. So filled some there. And yeah, looking beautiful. Beautiful. All right, boys and girls, again, I'll give you all some updates on, like I said, CrowdStrike and Zoom as we update the stops. Let's go find out who is taking over for me in the room today. And let's see. Let's click on live trading, scroll down here, and let's find out what beautiful person's taking over. Is it Dan? Nope, it's Tony. We got my boy Tony. He's going to be having a fun time with Tesla. I know it. I know he's going to have fun on this one, selling all kinds of bull put spreads and put sales, I'm sure.
Bro, you're reading my mind, man.
Reading your mind, brother.
Reading it. Like